Welcome to This Week in Oil from FMXConnect.com. It's Friday, June 3rd, 2010. Aaron Altieri reporting. Markets were closed for Memorial Day Monday, commemorating the service of our troops, a weekend of barbecues and marking the official beginning of the summer driving season. It was a good start to this week's theme of a stronger, more vibrant U.S. economy. More driving, more travel, rebounds in stocks, and a healthier automobile industry all seem to support this thesis. A welcome narrative amidst the ongoing battle in the Gulf and clumsy efforts at financial reform. In price actions for the week, crude oil is down 71 cents to $73.15 per barrel. However, crude was up 2 out of the last 3 trading days. On a weekly basis, the market was a little changed, but daily ranges were very wide. According to several energy traders surveyed, fundamentals such as positive data reports on U.S. homes and autos have helped support oil prices. Technically, the overall market remains bearish with the potential for further sell-offs. FMX Connect analysis suggests that a close above $75.80 should push prices to test $80. If this fails, expect to see further downside pressure down to $70.50. The Energy Information Administration released its petroleum and natural gas reports today. Crude oil supply dropped by 1.9 million barrels to a total of 363.2 million barrels, far exceeding most analysis estimates. This was surprisingly close to API's own report of a 1.4 million barrel drawdown. Distillate fuels increased by 500,000 barrels to 153 million barrels. Gasoline fell by 2.6 million barrels to 219 million. Refinery use slipped 0.3% to 87.5%. Natural gas storage rose by 88 billion cubic feet to a total of 2,357 billion cubic feet. We could be looking at a very volatile summer for natural gas with the hurricane indications we have right now as well. It's been 45 days since the start of the Gulf of Mexico disaster, and nothing but one piece of bad news after another for everybody involved. BP conceded its gross negligence earlier this week and announced that it had given up trying to stop the leak and will try to capture as much oil as possible instead. BP finished cutting through the pipe today after some problems yesterday and will attempt to fit a cap sometime this afternoon. There's no contesting that the effects of the spill have been absolutely brutal, and it's been a very turbulent week for oil traders as well. Peter Butel, president of Cameron Hanover and author of the Daily Energy Hedger, shared some of his thoughts on managing risk in today's Fuel for Thought. Peter said, "There are so many disparate factors having a say in the price of oil right now that it is difficult to say on any given day which one is or was the most important. This, of course, makes it more difficult to decide what to do to protect oneself against adverse moves, because it is hard to tell which set of influence might carry the day long enough to produce an adverse move. As a result, we would follow certain rules of thumb. When in doubt, hedge the old-fashioned way. Make sure that you can get to sleep at night. If some position is exposed enough to ruin your sleep, hedge it. If you have an existing position and are torn over what to do half. If you are long and worried about a decline, sell half. If it drops, you got out of half, and if it keeps going on, you are holding the other half. It is better to be half right than all wrong. This is a tough market right now." Looking to the week ahead, the big number everyone is waiting for are the May job figures coming out tomorrow. Goldman Sachs is looking for a non-farm payrolls number of a positive 600,000, having revised its prediction from up to 500,000 today. Consensus estimates show expectations of a small decline in the unemployment rate from 9.9% to 9.7%. Manufacturers' shipments, inventories, and orders will also garner some interest. Oil is looking to outside markets for direction. It has been moving up for equities and gaining on euro weakness. Traders will continue to watch Europe and China closely for signs of weakness, especially after a decrease in China's manufacturing index earlier this week, suggesting an economic slowdown. You can look for more energy market news, updates, and including overnight and options report at FMXConnect.com. This is Aaron Altieri reporting, and from everyone at FMX Connect, thank you for watching.